Imagine this. Tomorrow morning, you wake up and your job is gone. No paycheck coming in, no boss to answer to, but also no security blanket. Now here's the question. Could your investments carry you through? Could dividends alone cover the rent, the groceries, and maybe even a coffee out once in a while? Most people think you'd need millions stacked away to pull this off. And sure, that's the safe, conventional answer. But here's the twist. The real number might be a lot lower than you expect if you understand how dividend math really works. In this video, I'm going to break it down step by step, not just theory. We'll run the actual numbers, compare different lifestyles, and look at how yields change the game. And before we're done, you'll see why the minimum amount to live off dividends isn't the same for everyone, and why the number you have in your head right now might be completely wrong. Before we get into numbers, let's pause for a second. Why dividends? Why do people obsess over them? Think of it this way. If you owned a bakery, every morning when you sold bread, you'd take home some profit. That's your reward for owning the business. Dividends are the same idea, but on a global scale. Instead of owning a bakery, you might own a slice of Apple, or Coca-Cola, or Johnson & Johnson. And when those companies make money, they cut you a check just for holding a piece of the pie. The beauty here is predictability. Unlike stocks you need to sell for cash, which can rise and fall wildly, dividends land in your account like clockwork. Some companies pay every quarter, some even monthly. It's cash flow. But there's a big misconception I want to clear up. Dividends are not free money falling from the sky. They come from the company's profits. If the company struggles, that payment can shrink or disappear. We'll get into that risk later because it's more important than people think. But here's the hook. Once you understand how dividend yields work, you'll see why some investors can cover a bare bones lifestyle with a surprisingly small portfolio, while others chasing the wrong yields end up broke. And that brings us to step one, the part nobody likes to talk about, your actual living expenses. Here's where most people slip up. They jump straight to investment numbers without asking the most basic question. How much do you actually need to live? Because dividends don't care about your dreams of early retirement. They only care about one thing, covering your bills. Let's make this real. Picture two different people. The first lives lean. Small apartment, no car, cooking at home, a phone plan that costs less than some people's daily coffee habit. Their yearly expenses, around $18,000. It's not glamorous, but it's manageable. Now, the second person lives what you'd call an average middle-class lifestyle. Mortgage or rent in a decent neighborhood, a car payment, the occasional vacation, dinners out, kids activities. Their yearly burn rate, closer to $50,000, maybe more. Same goal, living off dividends. But the gap between those two lifestyles is massive. One needs their portfolio to quietly spit out a modest trickle of income. The other needs a steady stream, almost 3 times as much. Your expenses are the foundation. If you get this part wrong, every calculation you make later is pointless. So before we even touch dividend yields, ask yourself this: what's the absolute minimum you could live on without feeling miserable? Because the lower that number is, the closer you are to financial independence. All right, now we've got our expenses on the table. The next piece of the puzzle is yield, the percentage of income a stock or fund pays you every year. Think of it like renting out a house. If the place costs you $200,000 and it earns $10,000 in rent each year, that's a 5% yield. Stocks that pay dividends work the same way. Price on one side, annual payout on the other. Now here's where choices matter. If you stick with big, steady companies, the ones your grandparents probably own, you're looking at maybe 2 to 3%. Safe, boring, predictable. Move into specialized areas like REITs or utilities, and suddenly 5 or 6% is on the table. That's more exciting, but not without trade-offs. And then there's the danger zone. Those eye-catching double-digit yields that scream easy money. Investors get lured in all the time. The problem? Companies paying 12% often can't keep it up. Dividends get slashed, the stock price crashes, and what looked like a shortcut turns into a dead end. I knew someone who piled into a high-yield telecom stock years back. The checks were rolling in until they weren't. One morning, the dividend got cut in half, the share price tanked, and suddenly the income they were counting on had vanished. That's the risk of chasing yield without looking under the hood. So when we talk about the minimum amount needed to live off dividends, yield is the lever that changes everything. With the same expenses, a 3% yield demands a mountain of cash. A 5% yield, much less. And that's exactly what we're about to calculate. All right, time to put this puzzle together. We've talked about lifestyle costs. We've looked at yields. Now let's see how the numbers actually shake out. Let's start with a lean lifestyle, about $30,000 a year in expenses. If your portfolio only earns 3% in dividends, you'd need roughly $1 million invested. That's the math. 1 million at 3% equals $30,000 a year. Now let's raise the yield to 5%. Same expenses, but suddenly you only need $600,000. Drop your lifestyle further. Say you're living on $18,000 a year, and at 5% yield, you could scrape by with about $360,000. $50,000 invested. Here's where it gets interesting. The same person could either grind for decades chasing that $1 million mark or keep expenses lean, invest in reasonable yielding assets, and hit freedom years earlier. But before you run off thinking it's that simple, let me ask, would you actually feel safe living on those numbers? Because the math on paper is clean. Real life, it's messier. Companies cut dividends. Inflation eats away at your spending power. Taxes can shrink your checks, which means if you only plan for the bare minimum, you're building your entire life on the thinnest ice possible. So yes, it's possible to live on dividends with a smaller amount than most people think. But the real question is whether you'd want to take that bet without padding your numbers. And that's where the hidden factors come in. So far, the math looks neat. Expenses on one side, yield on the other, portfolio size in the middle. But here's the truth. If you stop here, you're only looking at half the picture. Let's talk about the things that quietly chip away at your income. First, taxes. Not all dividends are created equal. Some are qualified, which means they're taxed at lower rates. Others get hit as regular income, which can take a bigger bite than you'd expect. Two people with the same portfolio could end up with very different net incomes, just because of tax treatment. Second, inflation. Rent doesn't stay the same. Groceries creep up. Utilities always find a way to cost more. If your dividend income stays flat while your bills rise, you slowly lose ground. This is why dividend growth, companies that raise payouts year after year, is a lifesaver. Think of businesses like Coca-Cola or Johnson & Johnson that quietly bump their dividend every single year. That growth isn't just nice, it's protection. And finally, safety. Chasing the absolute minimum leaves you vulnerable. A single dividend cut, a market downturn, or an unexpected expense, and suddenly your retirement income isn't enough. This is why experienced investors talk about margin of safety, not living on the razor's edge, but giving yourself room to breathe. So yes, you can calculate the bare minimum you need to live off dividends. But if you want to actually sleep at night, you'll pad that number. You'll think in ranges, not absolutes. And when you do, the big question becomes, how much is enough for you? Lean survival or comfortable freedom? So let's circle back to the question we started with. What's the lowest amount needed to live off dividends? If you live lean, really lean, you could scrape by with something in the range of $300,000 to $400,000 invested, assuming a reliable 5% yield. For a more typical lifestyle, you're looking closer to $1 million at 3%, maybe a little less if you're comfortable with slightly higher yields. The number isn't carved in stone. It shifts with your lifestyle, the kinds of companies you invest in, and how much cushion you want. What's certain is this: the lower your expenses, the less capital you need. That's the lever most people overlook. They chase bigger and bigger portfolios instead of questioning the size of their lifestyle. So could you walk away from your job tomorrow and live purely on dividends? Maybe. But the bigger question is whether those checks would give you peace of mind or keep you one dividend cut away from panic. And here's the kicker: dividends aren't the only way. There's a hybrid strategy that mixes dividends with growth, and it could get you to financial independence faster. That's what I'll dig into in the next video. If you found this breakdown helpful, hit like and subscribe so you don't miss it. And let me know in the comments, are you already using dividends as part of your income plan? I'd love to hear how you're approaching it.